morning and welcome to Saxo Bank Market Call. Today is November the 1st. Yesterday was a very heavy day data-wise, a lot of data. First in the UK, nationwide house prices were out higher than expected and has been increasing for some time now. In the Scandis, we had Norwegian retail sales out a bit higher than expected, and also Swedish consumer confidence out higher than expected. In US, first we saw the ADP ADP job report out a lot higher than expected. This figure should be a precursor for the non-farm payrolls tomorrow. GDP annualized were out higher than expected out of the US. It was out at 3.9% versus 3.1% expected. So we are starting to see a pickup in growth in the US. In the US, core PCE were also out higher than expected, so adding a bit of inflation concerns on the growth. Also, the Canadian GDP were out higher than expected at 0.2% versus 0.1%. In Norway, they kept the deposit rate at 5% as expected. Regarding crude oil, we saw US a big draw in inventories, and actually a build was expected, and crude oil prices surged on this account. But the big news was, of course, the FOMC rate decision, and as widely expected, they cut rates by 25 basis points, but stating that there might be some inflation concerns going forward, and they wouldn't be surprised to see additional weak housing figures. Market developments: dollar Canada post new all-time lows at 0.9426, and cable in 25-year highs above 208. Euro dollar was not able to sustain the break above 145. Fixed income sold off after the FOMC meeting, as Fed probably won't cut in a recent future. JGBs followed through overnight. Stocks posted a solid increase following the FOMC meeting. S&P approaching July 2007 highs at 1556. Asia followed through with new record highs. Commodities, as I said, oil taking another leg higher on the weak data yesterday, and the weak supply almost closing in on $100 a barrel. And gold, December contracts breaking $800 for the first time in 27 years. What's going on? The FOMC, as I said, cut rates by 25 basis points and stated that downside risk to growth is now balanced with upside risk to inflation. The Fed is thereby signaling that we need very disappointing labor market data to justify further rate cuts. Initial reactions in stocks was to rally. The combination of quite strong third quarter GDP figures, a cut, and comforting words from the Fed about the state of the economy should take stocks even higher on at least in the next couple of weeks. As I said, euro dollar tested 145 overnight, despite a streak of quite strong U.S. figures yesterday. The most US dollar-sensitive commodities rallying forcefully. Crude oil soon testing $100, and the economy is still okay. Precious metals making new highs, and as I said, watch $800 in gold and $14.75 in silver. Calendar for today is still very heavy. Norwegian unemployment rate at 9 GMT expected at 1.7, which is actually lower than prior reading. It's very strong data out of Norway. But in the US, we have an abundance of data again with personal income and personal spending. It's all at 12:30 GMT. But the one to watch is the PCE deflator, giving an indication of the inflation. The month-on-month in PCE core should be extremely important to watch, expected at 0.2%. Also, we have initial jobless claims and continuing claims out of the U.S. At 14 GMT, we have ISM manufacturing and ISM prices paid out of the U.S. Expected at 51.5 and 63.0. Tomorrow we have a lot of data out of the U.S. Again, it's a very heavy data week, where the important is the change in non-farm payrolls, where we saw the precursor yesterday of the ADP job report coming out a lot stronger than expected. So a positive surprise could very well be seen here. Also, unemployment rate out of the U.S. and factory orders. Coming next week, we have ISM non-manufacturing in the U.S. FX trade of the day, we want to go short in a dollar Swiss at 115.87 offer with a stop bid at 116.06. We look for the break below 115.50. In stocks, as I said, a basis for a solid earnings growth is set with the increase in economic in the U.S. and the cut yesterday should really be a basis for further earnings growth, at least in the short-term future. But we want to buy DAX and want to see a confirmation that the high level is to be seen. We want to see a break of 80.63. Thus, we want to buy at 80.65 with a stop below 8,000, targeting 81.50. Our future trade is crude oil. As I said, it has been surging a lot lately, and we see a major resistance at 96.60 bucks a barrel. Even though with the heavy draw yesterday, we might see some short-term downside here, and mostly on profit taking, and of course the resistance. Thus, we want to sell around these levels and keep a stop above the 60 bucks a barrel. Maybe even 96.90. That is all for today. Thank you for joining in.